In this episode today, we're going to dive into stablecoins, a subject that my guest here, Erick Schneider, loves and knows quite a bit of, and a subject that is really becoming much more important for the cross-border payments industry. So, not only I want to know from you, what do you feel about what is going on with stablecoins, but also kind of explains a little bit the concept.
A lot to unpack. Very excited about it, but also daunting about, I'm starting to feel old, Hugo. It's like the younger guys are taking over on this part, but I will do my best.
No, that's okay. Look, I'm trying to keep up with you as you keep up with the younger. So what factors are driving the adoption of stablecoins in the market today?
Biggest one is utility, and it has a use case. And I think this is such an important one. While stablecoin is considered a crypto, it has a very different component too. You buy Bitcoin and it is an inflation hedge. It's done very well in the market, but that's a bit on the speculative side. A stablecoin is exactly that. It's supposed to measure stability. And so compared to a US dollar, it's going to be pegged 1-to-1. So one stablecoin equals one USD. So no matter where the dollar goes, it's not going to be going up and down. I'm not going to make money on it on a speculative side, but all of a sudden, this becomes the definition of digital money. And so that utility component, I think, is really important. If we take a look at what's important in the cross-border space, it's B2B companies, individuals needing to send money from country A in currency A to country B in currency B. And how do they do that? There's been a lot of competition. There's been a lot of frustrations. And what I think is interesting is the word SWIFT has been thrown out and people use SWIFT to go on. I think SWIFT is a misnomer because it's not SWIFT if you send it on Friday at 5:30 p.m. and it gets there on Tuesday at 2 p.m. there. So what do you find that is fast, that is efficient, that is 24/7? That's the value of stablecoins. And so cross-border companies have adopted the leveraging of stablecoins by saying, instead of using fiat, we're going to be using something that can be done 24/7 in settlements. In a lot of cases, it is not only faster, but also less expensive on the settlement side. So as we see pressure to go faster, pressure to have more transparency, and pressure to be less expensive, stablecoin is not the sole answer, but boy, it makes a good one.
Okay, all right, that's great. So how do stablecoins compare to traditional currencies and traditional methods of settling? You got into this, but how, I mean, is 24/7 is one of them, so it's fast, reliable. I mean, let's talk about it maybe in the foreign exchange side. I mean, because you have a stablecoin in US. Of course, if you settle in USD, you settle in one stablecoin. Can you settle in another stablecoin in another currency? How does that work?
Okay, so I'll talk about this part, but I liked your original question because it made me think there is no difference between stablecoin and holding it. So I have an account at JP Morgan and I have some funds in my checking account. Not as much as I would like, but they're there. They're digital. What's the difference between that, holding digital dollars and a stablecoin? In my opinion, nothing. It's a means to an end. And I would say, to me, the message is stablecoin equals money. Now, how do we do this stablecoin settlement cross-border? You've got US dollar and you want to buy the Brazilian real, for example, because you have to settle with a partner. So that US dollar has to be sent from a bank over to a corresponding bank in Brazil or a corresponding bank in Panama to Brazil, whatever the case is, to go with. Every time that there's a stop, there's a little bit of a chunk taken out, right? This is the cost of the middleman to go on. There's also a amount of time that has to go with. And banks work 9 to 5. I wish I worked 9 to 5, but I don't. I feel like I work 24/7, almost as much as stablecoin. The benefit to stablecoin is it never sleeps. It's on the blockchain. Blockchain is open 24/7. It doesn't take vacation time. It doesn't take sick days. It doesn't take bank holidays. It doesn't even close for Carnival in Brazil. So it has the ability to stay open at all times. And so if someone wants to settle Saturday at 3 a.m. and send an urgent payment to their client that has to be there on Saturday, it'll get there. And so I think that's one of the key differences. Now, this comes to the point of liquidity. It's not perfect. I'm not saying stablecoin is taking over tomorrow because it needs liquidity. So in that example that you gave, let's use USDG because it looks beautiful on your lapel over there, and Kraken is a happy member of the USDG Global Dollar Consortium. Someone purchases USDG in the United States and they send it through the blockchain into the counterparty, let's say, in Brazil. There has to be a market for that. There has to be a Brazilian entity that says, I'm willing to buy that USDG and pay you in Brazilian reais. And we would just say, great, buy it and give us instructions give instructions to pay to these predetermined parts. So at 3 a.m., transaction will go through, it will be purchased. The C equivalent of global dollar will be given to the Brazilian real, and it'll be paid out in the market. This is pretty similar to sending dollar, someone wants to buy dollar, and then they will give Brazilian real to go through. So to me, stablecoin equals money.
Yes, and settlements have always been that way. I mean, you settle, because even when you move money from one country to another country, really, the money really doesn't kind of move, you know. So yes, so I see stablecoins as being, you know, you credit and you debit the other, and this is can do 24/7, and the other party already feels paid and can do whatever settlement it does on its side, but that settlement already happens immediately.
It does.
So in a way, you don't need to prepay in a way because you have the funds and so you don't need what happens in this industry, which is that you have to send money ahead of time, just calculating how much remittances or how much payments you're going to go through, because you have to make sure that the other side have the money so it doesn't stop the payments. Now am I being
spot on? And I think this is one of the benefits of that 24/7. Not only is it, oh yeah, my loved one got money a couple days early than expected. There's that cost that's being eliminated. So that's working capital, right? It's companies are paying double-digit amounts in order to collect these funds, give it so that there's a 3-day hold on this piece. The benefit to stablecoin is I receive it, I purchase the funds, I sent it over, and so it greatly reduces the cost of working capital, and that spread is eliminated, which I think is great, but I also think that this is apples to apples. My question is, how can we take this a little bit further? How can we enable these merchants who are receiving funds, instead of accepting BRL, they don't need a conversion? What if instead of sending from, let's say, the United States, they have to buy USDG, they send it to the buyer of USDG in Brazil to BRL, and that person sends it to the merchant? What if it's just a merchant-to-merchant transfer of USDG? Because this merchant says, I want to hold on to USDG. I collect an interest, I have exposure to the US dollar, which I want, and then all of a sudden that closed loop, to me, that makes it grow enormously, and it gives so much power there, and it shifts us away from a very few number of banks into whichever merchant has the largest wallet is going to be able to say, I want to receive this, I want to go that, I want to be able to send funds, and that can be extrapolated to individuals as well. This is what excites me.
Yes, and that's true. But even for companies doing that, you need a new way of thinking financially in those terms.
Sure.
Because that role of the financial, the CFO, or the person who manages settlements have to change to be able to accept that from happening, because it's interesting, and if you get the consumer to accept that stable coin, then that will drive change, and I think that might happen more with business payments than with personal payments like remittances. I don't know, but
I think you're right. I don't want to exclude the consumer side, because what if merchants accept that form of payment? Just like we've seen Pix and payments with QR codes, we've seen that these new innovations can take over significant market share in just a few years. if we find a solution with stablecoin, merchants are saying, yes, we're willing to accept stablecoin for purchases. Someone goes in, they have a QR code, boop, they pay through that. Remittances all of a sudden will not have to go through the foreign exchange side. It could be a matter of held. I still think that there's a world where fiat is going to be relevant, though. I don't see that fiat will go away anytime soon. I don't think that stablecoin is to replace it, but I do think that this is a new, easier way to disintermediate banks, for example, and really, it sounds so campy, but give power to the people as far as selecting how to collect funds without all these friction and middlemen across the board.
Now, there's not one stable coin, there's several stable coins.
There are like 200 stable coins, and not all stable coins are created equal. You have the dollar pegged stable coins, which means you have USDG, for example. USDG buys dollars and dollars equivalents, which are short-term notes, treasury bills, and they hold it, they get a minor sense of interest on that amount. Then you have others that are backed by other cryptos. And so it's like, all right, it's a stable coin based on Bitcoin. And so Bitcoin is at $100,000, which is great, but I can't wait till it's 500,000. But it's at 100,000 now. We will say we will give $1 at 50,000 so that it leaves room for volatility, and it's backed by a Bitcoin. Then there are others that are algorithmically based, and those like Terra and Luna that we've seen have exploded and not going through. The other piece is transparency. So I think the question on size on stablecoins is important, but also on the regulatory transparency, on showcasing, okay, you have a market cap of $250 million of stablecoin. Do you really have $250 million equivalent, or do you have 238 and you're trying to time the market, or you're investing in something a little bit more aggressive, like a 9-month note of banks trying to get a little bit more return? That to me is the question. So you're right, there are a lot of stablecoins. They're not all created equally, so that's why you should go with the USDG.
So there's some stable coins are more stable than others.
Touche. That's exactly it. Which, interestingly enough, if you take a look at currencies, there are more currencies that are stable than other currencies too. So I mean, again, money's money.
Money's money. Yes. And the market drives to stability. So the more stable coins will increase in market share as more people want that certainty.
I think there are two factors. You hit the most important one, which is that stability within stablecoins, but the second one is adoption. Which are going to be the most relevant ones that people are going to use? Because as we mentioned, there are like 200. And there are some big brands that are launching it, but that doesn't mean that stablecoin is going to get used outside of that single brand. I think it has to be agnostic to a company, and it has to have that supply and demand in between. All to say, I think in a few years, we're going to see a consolidation significantly with a few winners.
And I think, for so long, the money transfer industry has been looked for one bank or two banks where all money transfer hold the money and they can pay each other and just have that reliability of banking partners. I think that stable coins are a great solution for that problem, because in a way, if you have a stable coin and most of the industry uses that as stable coin, then it's just credit and debits between one and each other, and that will speed the partnerships. An easy way to is not only APIs for the information to flow, but also for funds to flow with the information,
100%.
like that. And they don't really need to separate in two different channels.
You're right, and that to me is the beauty of blockchain, in which you don't need to all open up an account at a single bank in order to do this. The blockchain is able to offer this in those nodes, and here I'm getting into areas where I'm not that familiar with and not much of an expert on how blockchain technology works and distributed ledger, but it really is that. It's the component of these nodes are going to be able to provide access to all the players that are on there on a real-time basis along with data. So much so that we have the component of programmable money. And this is an interesting one, because I was saying, yeah, stablecoins, it's like money. But I would say it's like money on steroids because of all the functionality, additional functionality that you can get out of something like this. For example, there's recent use cases where creators on social media, they're on Instagram or something like that, and every time someone sees one of their posts, they earn 8 cents. Well, in a lot of cases, doing cross-border payments, you have to wait until someone has a minimum of $500 in order to send it, because otherwise it's not cost efficient, foreign exchange, fees, all these things. But since you're on the nodes and on transactions, and a transaction, and I won't get into what a ZK rollup is, because it's an issue, but it's an efficient way of sending funds back and forth, all of a sudden this is a fraction of a cent per transaction. So if someone makes 8 cents, pay them right now. So they're making 8 cents and they're able to see it in their account. And that's the beauty of programmable money. It's also could be based on escrow, saying, all right, someone's buying a house and, well, rates are high, right? So $1.5 million, they're buying a house. Or in Hugo's case, $8 million, he's buying one of a nice summer home someplace. And you're using stablecoins. You put those funds in an escrow, and you're only going to be released upon the signature from both people on title transfer, and it gets transferred.
And look, it's so interesting because before we used to speculate about all these possibilities, and everybody that listened to some of the speculations is, that's like science fiction. And it's so interesting that still sometimes it feels like science fiction, but it's happening. I mean, every single case that we've discussed now, I'm sure that we can find the company, the person, and the way they did it, because it's happening. That has not really permeated in everybody's mind, that we're talking about something that is happening right now. Not in the large scale that it's going to happen, but it's happening. And it's not a speculation of what's going to be the future. It is happening right now. Now, to realize that, it takes to go mostly mainstream and with the bigger players and the bigger corridors, but it's happening, So,
it's amazing to see, because I grew up watching the Jetsons, and don't judge me for being old, but here's one of the key components, and let's see how many of our audience remember the Jetsons. They had cars that were floating around, they had robots in their home. The cars that float, we don't exist. Tesla's not doing that just quite yet. The robot in the home, that's either a Roomba or Alexa, however you want to see it. But they didn't even think of the concept of digital funds that are working like this. And it's cool that we're living in a future age that couldn't even be imagined in the past. The future is now, Hugo.
And it's great to see that happening, and we want to see more of that happening. So we will discuss some key utilities of that. I think that we should explore that in our next talks. So thank you very much for listening in, and we hope to see you in the next one.